Hello, everyone, and welcome to this Family Building Society podcast, which will be digging into the expat mortgage market. The number of inquiries in the expat arena is growing, both for residential purchases and for buy-to-let investments. More lenders are entering the space or improving their propositions, meaning improved pricing and more product availability. However, this is still a complex area of the market, with overseas income and currency risk still a barrier in some instances for affordability, and higher mortgage pricing impacting remortgaging. Lender appetite for certain regions can also be a bit more challenging, as some areas are seen as high risk. In this session, we're going to look at key trends in the expat market, where the challenges and opportunities are, and get some tips on how brokers can put their best foot forward for their applications. I'm Anna Sagar, Deputy Editor for Mortgage Solutions, and I'm joined by Paul Roberts, Senior Account Director for Yorkshire and Lancashire Family Building Society, and Nathan Waller, Business Development Manager for East Anglia. Welcome both.
Good afternoon.
Fabulous.
So we'll kick off just by, I think there is sometimes some confusion about what is an expat borrower. I think it can sometimes get bundled in together with foreign national. So I suppose the first question is, what is an expat borrower, and are they on the rise?
So in terms of an expat, we specifically treat an expat as anybody who holds a UK passport. Also do include the BNO passport for Hong Kong and Singapore. But as a general rule of thumb, it's a UK passport holder, and they must hold a UK passport. It can't have expired.
At Family Building Society, are you seeing more expat inquiries? I'll go to Nathan on this and then go back to Paul.
Yes, we've seen an increased trend in those. It used to be people retiring as an expat, kind of been in the UK for quite a long period of time, and then they've done all their work and come right now moving abroad and enjoying retirement, sitting back up, kind of sitting down and their feet up with their pensions and things. But we're seeing more and more younger customers, those that are moving for work, could be working with the same employer, going to a different country, maybe have had a promotion, going to head up a different office in a different area, or those that actually are seeing it more as a cheaper place to potentially live. Cost of living is beginning to kind of impact that market, where they're looking at their quality of life, what income they could earn doing the same job in a different country, what costs there are involved in living in that country, and then comparing it. And also those where the job market's changed. Some countries are introducing kind of digital nomad visas, for example, where people can move abroad, living in a different country, and actually still potentially even work for the UK business that they've always been worked for, but log in via Teams, Zoom, similar to what we're doing now, and have a conversation. So they can kind of have a mixture of different aspects now. So since that's becoming more commonplace, the market is increasing on both kind of residential and buy-to-let market, where the flexibility is really key.
I think that digital nomad point is really interesting because it does. I'm assuming there might be some more quirks with those kinds of. Is it more challenging to underwrite those kinds of cases, or are there just certain considerations you guys have to take into account?
I mean, the main thing for a lot of things anyway is having the UK passport, and understanding the visa restrictions within that country. So again, as long as they've got the relevant visa for them to work and do what they're doing over there, then yes, we can look at them. So again, it's just understanding the nuances of them.
And Paul, kind of on your side, are there any Nathan really illustrated the kind of changing demographics, but I suppose, are there any particular countries or any hotspots of activity, certain geographies that are kind of increasingly kind of looking at that expat market?
Yeah, absolutely. The traditional ones being the European destinations. You specifically look at places like France, Spain, and Portugal. Your older borrowers have gone, retired out there. And then you've got countries like the US, Canada, Australia, and in particular at the moment with the Gulf states. So your Saudi, your Dubai's, Qatar's in nature are very, very prominent in this moment in time. A lot of activity going on. Certainly in the Gulf states in terms of property, and you look at some of the larger corporate brokers, some of them are now opening offices up in some of these countries. So you are seeing a shift of some workers over there. And as Nathan rightly points out, cost of living is a classic example of that. And some of the benefits of living in Dubai compared to living here not only a tax but the sunshine.
Yes, especially, at the moment, looking out my window, that does seem a lot more appealing. But is kind of taking a step back, and when expat borrowers are coming to you, I know that family offers different kinds of expat products. I think it's fixed rate and discount products and other things. When they're coming to you, what kind of products are they looking for? Like, what are the key features that they want from an expat deal?
In terms of buy to let, I mean, in more recent times, and I say the last few years, a 5-year fixed rate in particular for buy to let has been a very important product to have in your suite, with house prices as they are, with rents, etc. But with interest rates possibly now starting to head a little bit further south, there is a definite pickup in inquiries for 2-year products and the stress testing that goes with that. So again, it's trying to meet the demands of the market as it changes over time.
Nathan, do you have anything to add to that? Are there any kind of specific, is it specific product features that that customers or brokers, when they have expat clients, are coming to you and saying, "Oh, we want X, Y, Z in a deal"?
I think generally speaking, and you tend to find that although an expat might be living in a different country, what they are generally looking for is very similar to what they might be looking for whilst in the UK. Ultimately, they are looking for a loan in order to keep their main residence there, so that it's a good bolt hole for them to pop and still keep links with family. So they might be coming back every couple of months, seeing friends, family, relatives, or maybe kind of out on a 3 or 4 month stint over there, back for a couple of weeks, another 3 or 4 months out there. So they still want to keep that base here. It could be that actually the country they are going to isn't necessarily suitable for their family to necessarily move to now, where actually they're going to stay here. So they want to keep the family home for their husbands, wives, sons, daughters, whoever, to continue to go to school. So you've got that, as well as the buy to let, as we mentioned, either keeping it in their personal names or in a limited company wrapper, or just keeping that property there for an investment purpose whilst they're abroad to give them additional income. Maybe they'll look future down the line of going, well, I just want to keep that property here. So the main features and benefits they're really looking for is, it's not really any different to what all the inquiries that we're getting isn't different to what they're going to be looking for as if they were here in the UK anyway. It's just making sure that that need can potentially be met whilst they are in a different country. And I think that's probably more what they're looking for, is a lender that will lend to them more than anything else. And I think that's probably the key point.
Yes, I know that of family, you guys offer expat mortgages in over 40 different countries. So that's a lot of the European countries and a lot of the Gulf states. But that's not the case with other lenders. Sometimes there's some restrictions around geography. Would you say that's fair?
It varies between lenders, and GDPR has perhaps made it more difficult for some lenders in terms of which countries they offer, or just the due diligence that's required to have some of these countries on the list. And we have a broad spectrum of countries. Some might have slightly wider, some might have slightly narrower. The big one, the big ones certainly for me at this moment in time tend to be Europe. There are a number of lenders who perhaps struggle a bit because of GDPR with Europe. We DHL all our offers, which can help with that, because then they're being placed directly into the customer's hands rather than being unsolicited mail. So it can make a difference. And with the best in the world, there are an awful lot of people wanting to disappear off to France and Spain and Portugal for retirement. So leaving the cold weather of the UK behind is definitely a consideration.
And I think also another key thing about families proposition is the partnerships with packages, because I think for that's also a key thing. So I don't know if Nathan, you wanted to kind of talk through that a little bit, because you obviously offer that long list of countries, but for other geographies, you team up with packages.
Yeah, and for some of those countries, it can be that little bit trickier for ID requirements and also for the due diligence side of things. And it's normally for a select few countries that we have where they might be slightly higher on the risk appetite scale of things. But also the other key point for the packager network is there are some networks that don't have the ability for their advisors to be able to do the advice on the mortgage for somebody who's not necessarily resident in the UK at the time of the advice being given, due to their own restrictions. So those packaging partners play a key role in being able to pick up those cases for those advisors that can't do it, and be able to place that case with someone like ourselves for on the broker's behalf, and making sure that that customer that's come to them for advice is still looked after. So yes, for some countries they do play a key part, but also for those advisors that may not be able to advise, or even sometimes aren't necessarily 100% comfortable or sure what they're doing, they can play a key part in that as well, in either making them comfortable or just say, you know what, we'll take that case off your hands for you. We'll place it. We'll get it through. And once it's all done, there you go. Thank you very much for the business, and move forward. So again, they play a good kind of conduit between us and the advisor, and potentially the customer as well.
That segues quite nicely into my next question, which is talking about, what can brokers do to make sure their applications are as kind of in the best possible place. And I think actually teaming up with packages is a really good point to make, of actually, if there are cases, if your network is maybe a bit more restrictive about the advice process, or you're not as comfortable with certain things, that could be a key avenue to explore. I suppose also to kind of widen that out, what can brokers do to just make sure that they're putting their best foot forward in terms of package, or putting their cases together?
Certainly from my point of view, I mean, that, as Nathan's just explained, packages are very, very important to us in terms of expat business. You'll often find that this is not the core focus of a broker's business. So if they're only doing 1 or 2 cases a year, perhaps in this area, utilizing the expertise of a packager to help them place that case, because there are considerations about making sure that the documents are suitably notarized or stamped and certified. It's, each lender has quite often different rules around, do they have a minimum income? Don't they have a minimum income? And the packages are really useful at knowing the different criteria, because they'd see it on a day by day or week by week basis. So certainly from my point of view, we work very closely with them to help brokers. Again, it's an educational piece. I know, as we've perhaps said on these types of videos before, it's often an educational piece, and packages for us are a really great part of helping educate brokers.
Nathan, I suppose, would you say there are gaps in the market that need addressing? I know we've kind of touched on a few, maybe some lenders are a bit more restrictive around European geographies and that kind of thing. Are there gaps that you think need addressing?
What you tend to find is, the good thing is, in this market, there are a few different lenders that do operate within this space. And the one thing you do tend to find is there will be a lender out there for them. Main specific gaps, I think the main thing ultimately being is education and understanding. Looking at proofs of income, maybe it needs a translation. Understanding if it's a residential, how that lender will kind of convert income. Sometimes it's even understanding the type of income that the client's got and what they're eligible for. So we've mentioned the Gulf states, and some of those you will not have an income tax. So we might be able to then gross that up, because if you were to think about it, the income they're getting is effectively net income. So you might have to look at grossing that up. Again, how we'll look at things might be different to how someone else will look at things. So some documentation is relatively simple to understand. A French bank statement is going to be relatively easy to understand, whereas there are some countries where it is extremely difficult to understand what you're looking at. So you might need to find a good translator who's able to translate 3 months worth of bank statements, for example, or a payslip, or their ID documents, because it's not overly clear what each line on each part of that document means. So the main gaps really is from a product and from a lender perspective. There's a lot of different lenders out there that will be able to cater for them. I think, as we've kind of mentioned, the main gaps really is understanding and being comfortable with it. And that's where I'd say reaching out to somebody like ourselves will be able to guide you through what we can do, and being able to look at what else is out there. Is just getting a feel of what products that is available for that client.
And unfortunately, we are running out of time now. But to wrap up, I suppose if you wanted brokers to take something away from this episode, what would it be and why?
Plenty of opportunity, Anna. You've highlighted it a few times. There is a huge opportunity in this market to look after your clients, to educate your clients, to educate yourself in terms of what each lender does. And I know I was at an event only the other day with yourselves, and part of that was educating them on expats and just what is actually out there and available to them.
Nathan?
I suppose the only thing would kind of go down to our tagline on the website, really, for an expat, which is just because they're out of sight doesn't mean they're out of mind, and there are options there for them.
Well, I think that's a really nice note to end on. So thank you so much for tuning in. The next episode is going to be looking at expat buy-to-let specifically, so tune into that, and we hope to see you again soon. Thank you very much.